from the bank and you forgot $18 worth of interest, or gee, we've got 5 W-2s that you should have claimed and we're only seeing 1. And then so that notice then is the opportunity for the taxpayer to take a look at their records and correspond back to the IRS, like, oh well, that those W-2s are my cousin who has the exact same name, or any scenario. And realistically, I mean, 50-50. Sometimes the IRS just doesn't have the proper information, and sometimes the taxpayer just made an honest mistake. I mean, we're all human, and mistakes can be made. And then, so we have the tax examiner, the tax auditor. These are individuals that are in what we call posts of duty across the country. These are the local offices in Norfolk, Richmond, Hampton, Northern Virginia. Any sizable town is going to have an Internal Revenue Service post of duty. These are auditors, and what they do is they see taxpayers in their office. The IRS will send a notice, to a taxpayer saying, there's a problem with your account, and we would like to talk to you about it. These are the people that the taxpayer sits down with. They go over the records, and the IRS can either agree with the taxpayer or propose an adjustment to the returns that the taxpayer filed. And I don't have the statistics, but it's probably 50-50. I mean, all the computer systems in the world, still don't compare with sitting down face to face with somebody and saying, Mr. Jones, I've got a question about this. Can you explain it? And again, this is civil. There's absolutely nothing criminal about it. It's a informal, conversation between an individual from the IRS and the taxpayer. If the taxpayer so desires, they can designate a power of attorney that would then, communicate with the IRS on the taxpayer's behalf. And probably about 40% of all taxpayers elect to have somebody else represent them, before the IRS. Now, the next position is revenue agent. The revenue agent is, this is the one position where you have to have a degree in accounting, and preferably the trend now is that folks in these positions are coming from, they've done their first career working for a coal company or restaurant, business or something like that, and they've got intimate knowledge of how certain industries work, and then they're coming to the Internal Revenue Service and the IRS is leveraging that knowledge of how industries work. Back in the 90s, when the tech boom was blazing in Northern California, the IRS had no technical expertise on how a lot of the research and development that electronics firms and software firms expend. So the IRS was not very well prepared and didn't offer very good customer service to these corporations from California, that were the leading edge of the tech boom. So that got the IRS thinking, aha, we really need people that are trained in industry, and then we can always train them to do things the IRS way, but we need that baseline expertise. But revenue agents usually have an assigned inventory of taxpayers, and the files can be electronic and also paper files. The individual goes out and and now many of the individuals that they're trying to make contact with have received several notices already. So there's an inkling that, well, this person really doesn't want to talk to us, which enhances the likelihood that there may be a problem with the tax return that they filed. So the revenue officer, will go out to the place of business, to the, to the home, and they'll just say, hey, I'd really like to talk to you about your tax return. Do you have a few minutes? Oh, wait, no, you don't have a few minutes? Well, how about tomorrow, 1 o'clock, at the office? Here's my card. Here's my supervisor's card. You can verify I am who I say I am, and I'll see you tomorrow. And with any of these interactions, there are certain things that the IRS employee must give the taxpayer. One is a publication 1, which is a nutshell of the taxpayer's rights, that they can get a power of attorney to represent them, that it's a civil matter, not a criminal matter, and all these things. So hopefully, when the shock wears off of the IRS person, knocking on the door, the individual sits down, they read the information, and then they gather their documents, and then they go in, to have a true audit done of their tax return. And again, when you're going out and you're knocking on somebody's door, you don't know what you're going to get. I mean, there's a lot of anxiety in that position, knocking on a door. You don't know what you're going to get. All right, and then revenue officer. That's what I did for 7 or 8 years. And this is the good old-fashioned tax collector. This is boom, boom, boom. My name is Chris. I'm with the IRS, and Dan, I'm showing that you have $50,000. How are you going to take care of that today? And again, most of these individuals that the collection officer, the revenue officer has cases on, have been sent several notices from the IRS, and the issue has not been resolved. So there's a high likelihood either that the taxpayer is moved or the taxpayer doesn't want to talk to the IRS. So that job, some days, I thoroughly enjoyed the job. I loved it. It was high stress, high reward. You learn to think on your feet, and to be honest, 80% of the time, knock, knock, knock. Dan, my name is Chris. I was just waiting for you guys to show up. I am so glad. I want to sit down and talk to you and clear this up. Because if you owe taxes, that's a really bad mark on your credit score. The IRS probably has a lien that's filed against any real and personal property, and many individuals really are just they've been paralyzed, and they really do want some assistance in getting the situation cleared up. And one thing that I've got here is the form 433A, which is sort of the starting point it's a starting point for discussion between the revenue officer and the taxpayer. If Dan says, I know I owe $50,000, but I don't have a dime to my name and I can't pay you a cent, then I'm going to sit down with Dan and I'm going to fill out this 433A financial collection statement, and we're going to go through his financial statement, and I'm going to get a level of assurance that Dan is accurate. It very well could be that Dan forgot that he's got $100,000 equity in his home, that he's got credit cards, with open lines of credit. He could charge the taxes on his credit card. He may have a boat that he's forgotten about. All kinds of scenarios. And a revenue officer is often a financial planner for those who fail to plan. And I recommend that if you guys ever have a chance, this 433A is basically a balance sheet for your life. Every once in a while, on a slow Friday afternoon, I'll get out, a 433A, and I'll put my information down just to jog my memory what it's like for a taxpayer to have to sit down and do one of these. But through this process, if the IRS representative and the taxpayer, work together to fill out the form, and it shows that Dan truly cannot pay the $50,000, but he can afford to pay $500 a month, then the revenue officer will sit down and write out an installment agreement, just like very similar to a car note. And all right, here you go. Here's your first envelope. Here's your first stub. We'll look for that payment beginning the first of next month. And as long as Dan, agrees to that and does it, that'll be the last time that he hears from the IRS on that matter. So being a revenue officer, was just a lot of fun. And then, I was also an appeals officer. whenever you knock on a door, and whether you're a revenue agent, revenue officer, the taxpayer could say, wait a second, I'm appealing what you're talking about. And any taxpayer pretty much at any time through the process can appeal a collection action or a notice of deficiency. You know, collection action is by a revenue officer, notice of deficiency is by a revenue agent. The taxpayer can say, time out, I want somebody else to take a look at this class, or this case. That's what appeals officers do. It's impartial. They're, you know, people in appeals are IRS employees, but because of ex parte, the concept of ex parte is that the appeals employee cannot talk to anybody in the IRS about that specific case. The case has to stand on the merits of the case file. So if Dan is coming in and he says, I don't owe the $50,000, you know, I'm going to take a look at the case file, and only what the revenue officer or revenue agent has developed in this case file is what I can take a look at. I cannot call my buddy, you know, revenue officer, hey, tell me about this Dan guy. What the heck's going on? That is against ex parte regulations. You know, and it's a very common concept. And in 1999, the IRS got in a lot of trouble because appeals officers were having informal discussions with other IRS employees to help develop the case. And then probably the most glamorous job in the IRS is the criminal investigation agent. These are people that carry sidearms. They go to Glencoe, Georgia for 14 weeks, very much like basic training. And these are the individuals that you know, investigate money laundering. When a civil case, you know, when Dan finally says, you know, Chris, I'm not feeling this, and I know I can pay, but I'm not going to pay. At that point in time, that has potential to become a criminal issue, because there's absolutely nothing illegal about owing money, but there's something illegal about owing money and having the ability to pay and refusing to pay. So the criminal investigation agents get involved in that. You know, they do, you know, investigations, and they do research, and at some point in time, the IRS or the Treasury may actually file a lawsuit, you know, against the individual and press them with charges. And, you know, every year right around this time, before April 15th, there's a high-profile case or two that'll hit the front page, you know, of the papers about a local celebrity or somebody that you know is, you know, files have been charged for non-payment of taxes, and you know, one thing about criminal investigation agents, you know, after 9/11, I mean, they dropped what they were doing, and they worked with you know, the FBI and other organizations, you know, looking for terrorist activity. You know, you can map out certain activity, money flowing through bank accounts and charitable organizations and stuff like that. Yes?
I had a quick question. What's the tax treatment on foreign passive income? And if they refuse to pay, can you seize the property?
A lot of it depends on the treaty in place. You know, foreign passive income. You know, a lot of it has to do with, you know, what is the treaty in place. If the property is overseas, legally the IRS may have a right to it. Practically, we're not going to go to the trouble of seizing overseas assets unless we have a discussion with the country where the asset is.
Is the income still taxed if the funds are never physically transferred to the United States, but if they're in a savings account overseas? Are they still taxed?
That's a good question. It really depends on the facts and circumstances. If it's an American individual with an overseas bank account, and then that is income, and the income should be reported. The income may or may not be taxable, but it still needs to be reported. And that's actually one of the issues I was going to discuss, you know, if we had time. That's good. But it was a criminal investigation agent that broke the Barry Bonds steroid situation, you know, 5 or 6 years ago. There was a CIA agent that was actually taking a look at a case on Barry Bonds's I guess it was his manager or agent or something like that. And it was just going through the records during the course of the criminal investigation that they found the probability that he was receiving steroids. When you're a criminal investigation agent, you don't know what you're going to come across. All right. Oh, and if you want to learn more about any IRS positions, www.jobs.irs.gov, or go to irs.gov, keyword IRS jobs. And how am I doing on time?
5 minutes.
Oh, okay, cool. Dan and Matt just want me to talk about some hot issues going on. I'll talk about that issue first. Offshore disclosures. If you're an American and you open a offshore account, whether it's in Switzerland or the Isle of Man, near Great Britain, in France, in the Cayman Islands, that is income, and it needs to be reported. And the IRS has gotten a lot of publicity recently for sort of piercing the veil of secrecy behind Swiss bank accounts. There was a lot of resistance from Swiss authorities, but the premise is, if you have an offshore account, where did that money come from? And offshore accounts often accrue interest and other earnings. Where did that money come from? And so the IRS really worked hard negotiating with the Swiss authorities, with some of the Swiss banks, and the Treasury got involved, the State Department got involved, and offshore income, it's still income and it should be reported. And back in 2011, well, there's been several, but the latest in 2011, individuals with offshore accounts were given an opportunity to come clean and disclose to the IRS, yes, I've got $7 million in offshore assets, and the income on that $7 million was, $2.4 million, or whatever the case is. But there was a volunteer disclosure period where the individual with the offshore account could come to the IRS and say, hey, guess what? I need to revise my previous year tax returns. So that's a hot issue. Employee versus yeah.
Along with that program, didn't y'all have one that stated if you report somebody who has an overseas bank account, you get a third of that balance?
Yes.
Is that promotion, or you guys don't do that?
No, I mean, if it can't be a family member, it can't be somebody, you can't also be involved in the crime, but if you know that Dan, has a cash business and Dan is squirreling away millions of dollars in a Swiss bank account, and, because you have fair and objective information, if you come forward and call the CI, the Criminal Investigation Hotline, you can get a percentage of that. I don't know if it was a third. I mean, I was thinking 10%. If it's a third, I mean, that's some incentive there. But a lot of, every day the IRS gets hundreds of complaints from next door neighbors, and the complaint is, my next door neighbor Bob drives a Lexus, and I drive a Toyota. I want you to go after Bob. And it's crazy. People are funny. Employee versus contractor. With the downturn in the economy, a lot of this is something I'm hearing firsthand. A lot of companies that historically have issued W-2s and treated their employees as W-2 employees. And if you're issued a W-2, there's withholding, there's fringe benefits, and all this stuff. Instead of issuing W-2s, they're issuing 1099s. People that have worked at the same company for years and years and years, and they gather up all their information and they run to the preparer. They're very surprised when the preparer opens it up and it's a 1099 instead of a W-2. And with the 1099, there's zero withholding usually. And if you're a 1099 employee, you're supposed to be making estimated tax payments. Long story short, if you get a 1099 and you think you should be getting a W-2, you want to go to irs.gov, type in employee versus contractor, and the first hit will be a page for contacting the IRS about that issue. You know, because if you're an employee, you know, if you're working an assembly line and they want to issue you a 1099, that's not right. You're an employee, go into your employer, you know, your employer's place of business, a designated set of hours. You are an employee and not a contractor. All right, and do I have time for one more?
Sure.
All right, let's see. Identity theft. How many of you guys have read about identity theft in the newspaper lately? I mean, it's just rampant. Many individuals this year would go into a VITA site or an IRS office or their paid tax preparer. They sit down, they do the entire tax return. The preparer would hit the transmit button, and an error code would come back saying, your return has already been filed. And the person is like, oh gosh, you know, no, my return has not been filed. Sometimes it's just a honest dispute, which, when you have like a couple that's in the middle of a separation, you know, sometimes they'll include the other's SSN in the return and things like that. But what was happening was many individual social security numbers had been compromised, and folks you know, inmates in prison, folks overseas, you know, all kinds of other individuals were taking these social security numbers, just preparing random tax returns showing large refunds, and you know, a fair percentage of those returns got through the checks and balances. So the individual, you know, if Dan wants to file his return and somebody's saying, no, you've already filed your return, then there is a special process where Dan can call the special unit within the IRS, verify his identity, you know, by you know answering some questions. You know, what street did you live on when you were 8 years old? You know, in 1998 you drove a Toyota. What was the lending company? Very specific questions that only the individual would know. They verify the identity, and then they issue Dan a special identity number that he puts on his tax return, and that identity number, you know, it doesn't prove, but it indicates that the return with that identity number is the right return and not the bogus return that was filed, you know, in a prison somewhere. So,
They have to be really bold to do that.
What's that?
They have to be really bold to do that. I mean,
But you know, you're right. They do have to be bold to do it. But remember too that you know, your they is a ghost. You don't know who they is, and if it's a prisoner, you know, at a correctional facility, or you know, somebody in, you know, Eastern Europe, you don't even know who they are. They have software and methods for gathering this information and filing the returns, and realistically, the money will never be recovered. It's gone. You know, but the IRS is doing a lot to you know, prevent that on the front end. Any other questions?
We're out of time,
Oh,
actually.
that's good. That's good.
Thank you so much.
Oh, sure.